So bookkeeping, what is actually bookkeeping? I am very much aware that today is not the first day you are hearing bookkeeping. You've heard this word severally. And bookkeeping is simply the process of recording and organizing all your business organizing all your incomes together, organizing revenues together, putting together all your sales and all of that. So that's what bookkeeping is. And really, no accountant can actually do anything without a proper bookkeeping. If an accountant come in today to your organization, take up your bank statement, the first thing any accountant do to your data is to actually, record those books, put them together, organize them, classify them before you'll be able to make any useful decisions with those data. Let's quickly look at an illustration. She runs a real estate business. During the last public holiday, she sold 500 square meters of land to a rich Nigerian soldier for 5 million naira. Wow. She also bought 30 liters of fuel at 10,000 for the purpose of inspection, and 30,000 airtime for the purpose of communication with potential clients. Now, everybody's going to do this work. So you're going to list the financial transactions that are in this illustration. I'm going to give you 2 minutes to list these transactions and we'll go ahead. Have you finished listing them? Put the answers on the chat box. Let's see if you are correct. Because this is where it's actually starts from. It's actually start from here. There's no one person in this training that will have no transactions to record. So how do you even record them? No, I'm not going to show you that. So let's look at the quality of good financial transactions. There are several qualities for you to be able to keep data that your simple data must have. If your data doesn't have this quality, then they are not good quality. They are not good data. You remember the title of this training is keeping great accounting records. So these attributes are very, very important. So we have understandable. Somebody should be able to pick your data and should be able to understand them because these data are clear enough and they are understandable by all the users of the account or the users of the data. You remember the first illustration we gave. We said the transactions here. We said there was a revenue from sales of 500 square meters of land. If you look, you will discover that what are we recording? We're recording revenue from sales. And which kind of sales? We sold 500 square meters. We didn't sell 200, it was not 500. So you see, it's specifying the type of sales or the type of land we sold. And here we say land, the asset we sold or the revenue we are getting is not from any other sales, it's from land. And which kind of land? We have different kinds of estate. I'm assuming here, and this one is from Apple One Estate and at 5 million naira. Did you see how clear this record is? Anybody that picked this record up should be able to know that this income that came was from sales, the revenue is from sales, and they sold 500 square meters of land. It was land they sold, and this land is located in this area, and the amount for the land is 5 million naira. So you can see how clear it is. Now look at the next example. We say purchases of 20 liters of fuel for site inspection at 10,000. Now we bought fuel. The amount of fuel we bought was 20,000. It's not spirit, it's not gas, it's fuel. And the purpose of it is for site inspection. And the amount is 10,000 naira. Then we bought airtime. The airtime was not for communication, it was for communication. I mean to say, it wasn't for data, and it was not to call our parents, call our relations and our friends. It's for communication with customers, and the amount is 3,000. So you see that anybody that pick up this, we should be able to understand this data. Then the next quality that we're going to look at is your data must have purpose and relevant to whatever you are doing. It must have purpose. For what purpose? We know from the illustration, you saw the different examples of the data that came with purpose. You cannot say you are buying airtime. What are you using it for? The purpose must be there. You know, that's how you keep records. Then you remember, we say it must be relevant to the organizations. You don't bring your children's school fees to to your business account. You don't bring you pay tithes in church to your business account. You have to find a way of paying yourself, which is something that I will be working on soon. How to pay yourself as an organization, how to pay yourself as an individual running a business, so that you'll be able to kind of separate the business from your personal life. And when you do that, you'll be able to understand what you are doing. So back to the business of the day. You cannot pay a church donation and put it on your business record. No, it has to be relevant to the business. There's no need to provide this information if the data are not relevant. Don't provide them. Then we're talking about data. People should be able to rely on your data. I'm not saying don't make mistakes. There could be one or two, three, four mistakes, but these mistakes should not be consistent. You should be able to do your records free from errors and mistakes. It should be minimized to an extent. Because if as an accountant, pick your data and I discover that I discover one or two, three, four mistakes, I won't rely on those data. I will not be able to do, sampling on those data. I will want to go deep because I will feel that the data you're providing for me might not be accurate. They might not be reliable. Then your data must be complete. You cannot be keeping some data and don't keep the other data. People came into the organization, bought things, you are keeping record of sales, but you're not keeping records of, inventories. You're not keeping records of expenses, but you're keeping record of sales. How do you now make decisions with those records? So your records must be complete. That is very, very important quality of a good data. Your financial transaction must be timely. Don't provide financial transactions that they're no longer relevant. Supposing you have a policy in your organizations that says by the end of every month, let's say 31st, or the example I put here is say 5th. You say you want to close all your accounts on the 5th, and your reports are not ready. You're providing those reports on the 10th. Now, there's no way that the management will be able to plan with those data. There's no way the management will be able to make sound decisions for the next coming month with those data. So if you have a policy that says a certain time, you have to keep to it to provide relevant data, timely data that will be very useful to the organization. Now, I should be able to compare your data between one period to another. Last year, I should be able to compare and say, we have 5,000 sales last year. And what sales are we having this year? I should be able to compare what you did in July with August. Today, the August is ending today. I should be able to pick up your, some data and do a comparison and said, oh, supposing I sell umbrella, I would say, how come umbrella sold so much this month? And it could be because there was so much rain and people were trying to, protect themselves and they bought a lot of umbrellas. It prepares you. How many umbrellas you did sell in August 2022? You now know that if you sold 5,000 umbrellas and now you have shortage of umbrellas, next year 2023, you have to prepare very well for a good sales in August. Those comparisons actually help you to be able to keep track and make good or sound decisions with your data. So we talked about communication. You have to communicate your data to the person that has the power in the organization to make decisions with them. Your data should be communicated to the right person. Then the next thing we talk about is that your value for the value you are paying for those data, the cost. it should be able to exceed the cost. For instance, you if you discover you will see that all the software that we've been introducing to us, in these trainings, are all soft, easy software that you can use for free. There are a lot of software that are very, very hard. I'm not bringing those ones because as a starter, as a beginner, small business, medium business, you have to be able to use the free things to, organize yourself. Then, if needs be, after some years, you can now migrate to a higher data. So why do we even keep records? Why is there a need to keep records? We need records for planning. I have mentioned that, severally. You cannot actually, make decision in an organization without a proper record. For you to be able to make decisions, you must keep relevant records. And you can't even make decisions without planning. The first step is to actually plan, then you make decisions with the data that you have gathered. Now, it helps you to be able to track all your receipts, all your payments, your sales, your record of every other transaction made in the business. It allows you to effectively manage and grow your business and your organization. Without data, you can't grow your business, you can't manage your organization. It helps you to organize your business with both the supplier and the customers. Now, if somebody show an interest, you're going to quickly send the person an invoice. It will help increase your sales definitely. you know Somebody has finished paying for a product, you quickly send that person a receipt of payment, and that will help you, keep yourself organized, put you before your customers, as very, very organized. Then there are a lot of reasons. One of the other reasons, do you know that it's required by law to keep your records? You run a business. Once the business is being run in Nigeria, and not just in Nigeria, in any part of the world, it is required that you keep your data. So if you are not keeping data, you are wrong. You are wrong. I think I have covered all the reasons that for us to keep data. Now, for external purposes, you keep data for the lenders, for the government, for the tax authority. You know, when you keep data, it gives you opportunity like contracts and opportunity to loans or grant. But when you don't have data, you won't be able to access that. Let's quickly look at this illustration. Then it will show us how important keeping data is. I want us to be very, very involved. This Be very, very active so that you can learn something very, very important. Now, Janet desperately has been looking for a loan or a grant of 5 million naira and above to expand her fashion business. During her lunch, during her lunch break on a bright Monday afternoon, she met Tony Elumelu at the cafeteria. She told Tony how 5 million will move her business from what it is now to another level entirely. Tony, being very pleased with the conversations and the energy in her, decided to give her the loan on one condition. What's the condition? I know some of us will be guessing what the condition would be. So it's to provide all financial records for the past 3 years of the business operation in the next 24 hours. Unfortunately, Janet could not get or provide any of the accounting records. However, she was very smart. Do you know what she did? She called her account officer to send her 3 years bank statement. Then she forwarded to Tony Elumelu. Now the question is, do you think she's going to get the loan? If you think so, tell me why. Drop the reason why you think so. Drop your thoughts and the reason on the chat box. Let's look at it. Ah, let me know answer it. So that will take us to the method of bookkeeping. There are actually different methods of bookkeeping. We have manual bookkeeping and automated bookkeeping. For the sake of this class, we are not going to be talking about manual bookkeeping. We are talking about automated bookkeeping. Let's have a recap. What have we learned so far? We talked about bookkeeping. We say it's simply the process of recording, organizing all our business transactions that have occurred in the course of the business. As a bookkeeper of your organization or business, you are responsible for keeping all your financial transactions. Who is responsible? You are. So, but as you're keeping those records, there are qualities, there are things you must watch. You don't just keep any record, the way you like. They must be understandable. The information must be clear and understandable to all the users. They must have purpose and relevant. It must be relevant to the organization. So remember the examples that we gave here. They must be reliable. Reduce your mistake if possible. Avoid your mistake completely. They must be complete. Don't record some transaction in one period and leave the other one. You must record everything. They must be timely. You must be able to compare this transaction from one period to another or from one season to another. Don't communicate these data to everybody in the organization. Communicate only to the person that has the right to make decisions. The value must exceed its cost. And we say for the reason of bookkeeping, we have two purposes. We have planning and decision making. For external users, um, we said is required by law and is good for opportunity like contract and loans. And we say there are actually two methods of bookkeeping, the manual and the automated software bookkeeping. We are using the software. So that this is where this class ends today, or this is the end of this module. Please go through it, and tomorrow same time we will see. Please drop your questions on the description box. You have any questions, you have a confusion from what we have discussed so far, do not hesitate to drop those those questions on the description box.